It is Saturday, August 6th, time is 3:36 p.m. Just wanted to do a quick explanation of my trading method and just kind of go through some examples and just show what's going on. My thinking is, and there's different thoughts and different methodology. There's, of course, as we all know, there's a trend following, and there's the version to the mean, the counter trend. And mine is more counter trend, version to the mean. And I get a lot of arguments on really the only way to do well in this market is and to make money is by using a trend method, and I really don't agree with that because I've tried both. And my thinking is that the market does this. It moves from irrational to rational, and it moves up again, then rational, moves up, down, and that's what it does. I'm thinking that most of the time, 80% of the time, actually, statistically speaking, it's here, then it's here, and it comes back, and it does that. We do have sometimes where it is trending heavily, but that's really depending on what market you're trading and depending on the environment that you're trading in and the time you're trading in. Most of the time, it's going to be going back and forth within a range cycle. So the reason I think this is happening is most markets, specifically Forex, and this method seems to work even better on Forex, is most markets are watched and traded by many different entities some are quite large, especially with Forex. We have commercial traders, we have hedgers, we have dealers, we have institutions that need to keep price within a specific range, a predictable range. And of course, we have other people that are making products and selling them, and they want to make sure they're not losing a lot, so they hedge on the trades. Therefore, when the market moves this way, we get some range and we go back and we see the midpoint. We go back to the mean. And different schools, but this is my thinking. So what I wanted to also do today is I went ahead and drew a full year worth of price action on 1 hour bar, 1 year, and I kept my levels. I put all my levels statistically predicted levels from the past drawn on the chart, and those levels. This is this week's level on the ADCAD. Those are statistically given to me by looking at 1 year worth of data, saying over 1 year, if the price opened up in the midpoint is nothing but the opening price. If the price opened up in here, then we are going to be, chances are we're going to be staying within this range in here, not over here, and that's probably a 95% chance most of the time, 90-95% chance. And we have probably maybe 75 to 80% chance that we're going to stay in here, between this range, right over here. Okay, there's chances of breaching, but closing is less probability. So it's going to breach it and go up to here. So this is the method. So with that said, I'm just going to go ahead and look at few historical examples and kind of prove my point. And the best way to truly test something, especially when you're dealing with statistics, is to have random methods. So let's say that we do two things. One, we take a random currency of those currencies that I trade, and I trade those specifically because the spread is not on those. I can do other currencies, but the spread is wide enough to make it not so attractive to trade. And of course, it can work on the micros as well. It does work on the micros and the ETFs for different reasons. but I can do that maybe on a different video. So let's just deal with just the currencies today, assuming I'm going to pick from this population in here, and I'm going to look at the past 1 year. And 1 year, because the levels that I receive are based on calculation that have happened within the past 12 months. So I look at recent markets, and markets do change year after year, but they do stay the same as well. But in order to be statistically sound, I'm looking at most recent data and deriving my lines from those past 12 months. So I'm going to pick out right now. I'm going to pick out a random. I'm going to be pausing the video also back and forth. I'm doing something else around the house, so I will try to finish the video today, but I may pause in between. But first thing I'm going to do is I'm going to pick a random currency, and I'm going to look at historical data. So let's say I'm going to use, oops, let's close this out. Here are the currencies, and I number them from 1 to 21. Then the next thing I'm going to do is go to random.org, and we're going to do 1 to 21 and get number. And we got 21. Okay, so 21, we're going to be trading USD CAD, the CAD. We're going to be looking at this currency specifically, and in order to be accurate as well, instead of looking at recent week or week that I may be familiar with, I'm going to pick a week in 2022, and we have 1 through, we're going to be 1 through 31. So we're going to go back to here and go back 1 to 31 and good. And I have 9, week number 9, which is going to be February 28th through March 6th. The 28th through March 6th. So I'm going to take the CAD, and we're going to go back let me pause. I'm going to pause a little bit till I get to that date. So this is February 28th, and I just put a line in here. The extended initial is February 28th. This is starting week, and it goes up until Friday right here 5 o'clock. So this is the week that's in question that we're going to look at. So based on that, I'm going to go ahead and look at this specific week. Those lines are this week, so I'm just going to move those out of the way. Okay, so for February 28th through March 6th, which is here, those are the levels. This is R1, this is R2, this is S1, S2. So we came in, and those would have been drawn. Actually, we opened up over here. Let me fix that. We opened up over here, and again, the midpoint is the opening of the week. So it opened up over here, it moved up close to R1, didn't do anything, so you leave it alone. It went down, and this is this week. Let me move this as well. So it went down to S1 right over here, and it came very close to this level. So you could have bought a long in here. And the way I do it is I do it right before those levels. I mean, I do it maybe 10 pips or so, because hourly bars, you can had them quite tight. So 2660, and this moved up to 2704, 50 to about 50 pips or something like that. So it moved up to here, and my target, I always, of course, I always wanted to have those targets. And sometimes I'm traveling, I'm doing stuff, I'm out of the house, I'm not watching all the time. So I put the long here and leave the target in here and just forget about it. That's the best way to do it. Well, buy in here and target in here. But if and when I'm watching, then my target is going to be in here. This is obviously something that it looks like a support / resistance in here. So if I've been long in here, I may take some off the table in here or a few pips before. So good 35, 40 pips in here. So you've been long in here. But if you had missed that, you can continue moving. You wait on it. You can put another limit in here for a buy. And if you had missed that, you have another chance in here, another chance in here, and another chance in here. And all of those opportunities, 1, 2, 3, 4, 5, 6, would have worked for a very nice target in here. Now, let's assuming we went in here and we got over 60, 70, 80, or 100 pips, or depending if you had gone through 2664, 27, 39, that's 70 pips, something like that. But assuming this has not done, or this is closed and done, we move on through the rest of the week, went back to the midpoint, tested it, and it went down from here. I used to trade those midpoint tests. The first test is what I call them, which is here. And those seem to work. The second test, they're not as well. If they close above it, I don't like them as much. But those are for another day. Those are some additional trades that can be taken in the future. So nothing here, and you wait, and only again, we take only the support and the resistance. So you could have gone long in here, and this trade would have taken some heat to 2660. It would have gone to 2650 down to almost 26. That's about 50 pips worth of risk. So what I do is I would buy in here and add to it in here, actually, with a stop down here somewhere. But long, and we're maybe out of both positions in here somewhere, or maybe in here towards support with profitable position. This would have been really profitable, and this would have been somewhat profitable. And it moved up from there and it kept on going. So again, it's just a random week. It was picked up in here, and it was done with a random instrument. And I'm going to pause and pick another video next. Okay, now let me go ahead and take another example. So we go back into, let's see. Okay, let me go ahead and do another example quickly. We're going to go back into random. We're going to look from 1 to 21 to pick which pair we need. Go back. 1 to 21. Good. And we have 18. 18 is going to be 18. I'm going to get my Excel sheet now. Let's see. I don't know what happened to my Excel. Let me find it. Okay, I got it. Went to a different screen. 18 is going to be New Zealand USD. New Zealand USD. Let's find the date. We're going to go back, and it's going to be 1 to 31 for the weeks. Get number, are we getting week number 10? Week number 10 is going to be March 7th through the 13th, March 7th. And it's going to be close by, I think. March 7th. I think it's going to be this week. Let's see. March 7th, 6th, 15th. Okay, so yeah, it's this week. So it's this week. It just so happened to be right next to it. We'll move this. I know. So we have the New Zealand March 7th. We opened up in here. We moved up, and those are the levels: R1, R2, S1, S2. And maybe it would have been filled in here, maybe not. We could have put an order in here. Or I could have put an order in here at 69.25. Most probably, I would not have been filled because of the spread. I'll probably be here at 27 and reach this high 23. Assuming you were aggressive and you took it at 22, went down to 55, 30 pips, and it didn't do anything the rest of the week. But it didn't get you into any problems, any troubles. Okay, so let me find, since this one was not fun, let's find another one. I'm gonna pause again, come back. Okay, so we're gonna go back to the site. Where's the site? Okay. So we're gonna go back and pick one, 21, get number, and we got number 14. Number 14 is Euro Japanese, and the week is gonna be go back, and I'm gonna be 1 to 31 for the week. For this year, get numbers. And then the week number 20, which is May 16th through 22nd. May 16th. So let me pause and, well, let me just find it now actually. May 16th, this is March. This is March. And May 15th, May 16th over here. So we started the week here, and here's actually a good example. So Euro and Yen, the whole week opened up in here, those levels. We're gonna move those levels out of the way. So those are this week's levels. We're still there actually. So I opened up in here, moved up. I would have been short in here with one that would have taken a lot of heat in here, and it would have added, and it looked like I've added in the past. Let me just move this out of the way again. Oh, I had sold in here, so I would have been one here, another one in here, moved up, took heat on both positions, then came back down some. So you would have been at a loss in this position, but would have made some money in here. It would probably, the whole thing would have been break even at best. So we were short from, let's say in here 139.04 down to 138, about 50 pips or so. Then it moved up again, assuming it took profit here. If he didn't, then it moved up again, and it continued going down. Anytime it tested this level, it went above it and went down again. So it could have been short, took profit, short, and took some maybe some profit or break even in here, and short again at 39.06, and to pick it back up toward the end of the week, closing on Friday at 38.35. So about 70 pips. So this would have worked as well. So just another example, and just to be clear, this method does have stop losses, and it will lose money at times. So there's some trending markets that are absolutely crazy, and it'll just keep moving, just like what happened with my micros. It's moving against me, and there's just nothing you can do. So I mean, it is that, and I'm gonna pause the video and show some examples of few losses. Let me pause for a minute. Actually, I'll just go ahead and show the account itself. Okay, assuming that you had seen the videos on August 17th, you've seen my setup, and you're thinking, this is great. This is what I've been looking for. This is just going to be great trading method, and you start taking trades like I did, and you took this trade in here for 2,000. Balance was 2,000 then, and that was actually in the early stages of me using this method on June 20th, using it full time. And you took a short, and all of a sudden, and here's a stop loss. This says a stop loss in here. If it says stop loss, then it was set in place and it will stop. If it shows a minus and close order, it means I closed it manually because I made the profit for the week. So a stop loss is basically saying I'm totally wrong on this one. So here's a stop loss, $29, and that's a lot of pips. It doesn't see how many pips in here, but that's a lot of pips. There's another one in here. Actually, this is a position added to it. I added 2,000, added 1,000, so I took a stop loss on both. Here's another one in here on the AED Swiss for 41. That's a lot of pips for $2,000 position. And here's another one in here, another one. So all of a sudden, you're looking at this method, thinking, it's just absolutely atrocious. This is just the most horrible trading thing you can have. And this is real account balance in here. There's nothing, not a demo account or anything. So you see a bunch of losses in here. They're heavy losses. But if you continue on and continue working the method, believing in the statistics that I've seen, you'll see nothing but good trades in here. This one is a close order. That's probably just part of the close order I did. So it's not really a stop loss. I just left the position. Or it was in addition to another position that both of them came out to break even. I think it's right here. Maybe not, I can't remember. And they I closed both of them at the same time. Then I continue on. Again, nothing but good trades in here. This is closed again. This is closed manual. This is not a stop loss. So it does have stop losses, but it's not really that many, luckily. And this is continuing. Close. No stop loss after that. So after this initial, or this time in here, which you will see it. Sometimes you see a trending market like the Japanese yen or the CAD for whatever reason that we just continue running against you. You have to put a stop loss in and you have to take it. So it's not one of those methods where you can stay with it. I know I'm stuck with the micro now, but I fundamentally believe that the market should be much lower than here. Plus, I believe that I'm still okay. I'm still within my stop loss parameters. One stop like this may take 1 or 2 weeks worth of profit. This is to be expected, and it's actually statistically seen in my studying of this method. So that's pretty much it. Again, the market, what it does, my thinking is it moves up, then it fluctuates, then it retraces a little bit, then it moves up or down, then it reverses. And what I do is I take the orders in here and I make this is a trace. I make this much profit, or I wait for a move up. It's reversal down here, and I take my profit in here, from here to here, somewhere in between. So that's the video. It's a long video, I know, but I just wanted to go through some examples and just be as unbiased as possible on the method and how it works. I hope this helps. If you have any questions, put them through or send me an email.